Welcome to Agent of Wealth Podcast with Marc Bautis from Bautis Financial. In this podcast, Marc helps small business owners and retirees overcome the multiple wealth planning challenges involved in your financial life. We do this by creating comprehensive wealth management plans to guide you towards financial freedom, ensure you never run out of money, and help create a balance in life that prioritizes what is most important to you. Join us for this journey as Marc draws from years of expertise and guest experts to solve the multiple wealth planning issues involved in your financial life.
Hello and welcome to the Agent of Wealth with Marc Bautis of Bautis Financial. Today we're talking about incorporating real estate into your investment strategy. Good morning, Marc. How are you?
Good morning, Eric. I'm great. How are you?
Doing fantastic. Incorporating real estate. Now, I have a rental property. That's the only, investment property that I have. But I know there's a lot of other types and there's a lot of other reasons to get it. Why are we talking about this topic specifically on this podcast?
Yeah, so I think, as a financial advisor, a lot of people think that the only types of investments I'm going to push are stocks, bonds, funds, but I'm actually really open and to basically any type of investment that makes sense. And there are different reasons why the topic we're covering today, real estate, makes sense for some people, may not make sense for other people, but at least we'll go over all the different types of options someone has with investing in real estate and why or why not they should consider it for their investment portfolio.
All right. And I know there's a bunch of different types, but what are the main reasons that somebody should be considering it? I mean, obviously it has to work with all their other strategies and their long-term goals and things like that. But what are those reasons?
Yeah. So I guess the simple one is diversification, right? And it goes all the way from the worst diversification that I've seen where people will have all their money in one stock or their company stock to at least then spreading it out across different asset classes in the stock market. And then real estate just brings another component to it. I look at it as having four benefits. So the first one is cash flow. And we're talking about some kind of rental real estate investment property that, at the end of the month, there were some rents that came in, there were some expenses that were paid, and hopefully there's a positive net cash flow at the end of the month. The second piece is appreciation. Just over time, the value of real estate goes up. Everyone says that they're not making more land. And then you'll see the appreciation differ in differing parts of the country. So like they say on the coast, you'll see more appreciation, whereas in the middle, you'll see more cash flow. But we'll talk a little bit more about that. Third component I like about real estate is there's an aspect of forced savings to it. So most people don't purchase properties in cash and they take out some kind of loan. So as you're paying that loan back, a portion of it will pay the interest, obviously the interest on the loan, but also a portion is paying down the principal, which acts as a forced savings vehicle. Mm-hmm. And then the fourth aspect is what's called depreciation, which is a tax benefit where you may be getting cash flow, but because of this concept called depreciation, you actually may not have to pay tax on that in the year that you receive it. So there are some tax benefits to real estate, depreciation being one of them.
Okay. That's interesting. I'm interested in the depreciation part of this for sure, because that's not something that you really think about, or at least I haven't thought about when it comes to property. But speaking of property, what types of investment properties are there besides like we said, the rental property? What else is there?
Yeah, so you're simple, and there's your simple or traditional rental property, and a lot of times I'll see the example where someone lives in a house, an apartment. They start a family, they grow, they outgrow where they're living. They go purchase another, residence, but instead of selling that, whether it was an apartment, condo, 2-family, 1-family, single family, they rent it out. And it winds up they just kind of fall into being a landlord. Mm-hmm. So you don't have to start out that way. You can at some point have enough cash saved up and decide I want to get into the real estate game and go out and look and maybe hire a realtor and find that rental property. It could be a single family home, a multi-family home, or all the way up to some kind of commercial or apartment building. But essentially what you're doing is you're taking on the role of looking for it, purchasing it, managing it, and it's a very active aspect to it. Mm-hmm. The reasons a lot of people will think, well, I have to do this in my backyard. I know the area, and that's not necessarily true. You're seeing it's becoming a lot more popular to invest in real estate or purchase rental properties in differing areas in the country. And I think I mentioned, the middle of the country being it's a lot. The middle and even some parts of the South are a lot more conducive if you are looking for cash flow. You might not necessarily see that same level of appreciation that you might see in the areas where I'm from, the New Jersey area. Mm-hmm. But, if you like getting that monthly check, that monthly income, the middle states in the country, some of the cities like Indianapolis, Columbus, Kansas City are great cash flowing cities.
Yeah, absolutely. And I know that through my own experience, the plan was years ago that we were going to get into some rental properties, and I wanted to have between 7 and 10 in mm-hmm. total. We ended up with one because we just weren't equipped to deal with all the things that we were dealing with. I mean, the rent was fine and all that, but finding renters, getting renters in there that didn't, threaten us or didn't do damage to the property, that became a bit tricky because we just didn't know what we were doing at first. So we kind of went into it blind. But I had some friends that they had multiple properties, and the kind of the story was we were all going to do this together, and then one of the gentlemen would be kind of the property manager for everybody, and we wouldn't have to do all the maintenance type stuff. We wouldn't have to do all the finding renters and collecting and so on and so forth, because I would much rather have been multiple properties, but hands off as far as having to deal with all that. And it sounds like that's got to be what you're doing. If you're buying in different parts of the country, you're certainly not going to fly out to another state to change out a water heater.
Yeah, definitely not. And that's one of the considerations if you do want to become a real estate investor is, do you want another job doing, it can very quickly turn into another job.
Absolutely.
So we'll talk a little bit later about how to evaluate rental properties. But one thing I always recommend when someone's looking into it is when they're, running the numbers and determining if the property works or not, actually, whether they're going to manage the property or not, build in the cost of a property manager. That way, if you get started and it just becomes too overwhelming, too much work, you can very quickly slide in a property manager, pay their fee, and it still is a viable rental property. So, and then like you said, especially if you're purchasing properties in areas where you don't live, hiring a property manager is a necessity.
Yeah, absolutely. And just going back to what you were saying as far as location-wise, for the listeners, I'm actually in Nebraska. Mark is, obviously he's on the East Coast there. But I was speaking to a couple of gentlemen and a realtor from California, and we were all talking about property, and they were just throwing out outrageous numbers, right, for, how much a property has gone up and how much people are purchasing properties for. And they're talking $1.5 million and $2 million for a single family home, a little bit of property. And I just was kind of quiet on the call. And then I just kind of brought up, I said, it's great we're talking about this, but I can't even talk to you guys on the level that you're talking about how these investments work for you compared to where I'm at, because, a 2,400 square foot house, 3-bedroom, 4-bathroom, big, in-ground pool was 170. That's my home. 170 here, right? They're like, oh yeah, that'd be about 1.8 million where we're at. I'm like, oh,
exactly.
Wow. But like you said, those properties are not making a good cash flow, but the property value was going up, and they were talking about how much it had gone up in the last 3 years. That's a tremendous amount. I mean, they're making 4 times the amount that I purchased my home for, compared to, what I could get out of rent from a home like this in the Omaha or Nebraska area or Kansas City, like you said. So it is a huge difference, and there's a lot of research to be done. How do you do that research? How do you gather that information to make a good decision? Yeah.
So I think, just to kind of touch on a little bit of what you were talking about, the different prices in the different areas, you also have to look at, what's the rent that I can expect from, a particular, whether it's, on the East Coast or in the, in Omaha, like you said. And, in New Jersey, you have that appreciation, but you're basically lucky if you break even every month from what you have to pay on expenses, property taxes, the actual loan on the property, to whereas in, somewhere like Omaha or Indianapolis, you may, have a lot better cash flow return. And then someone will ask me, well, should I bank on the appreciation? And that's why I like the cash flow and property. You obviously want both. You want cash flow and appreciation. But if I had to choose between one or the other, I really like to focus on the cash flow, just because you have more control over it.
Yeah.
You can run numbers on a property. You can get what are actual expenses, what are actual rents, and you can kind of make a pretty, there'll be vacancies and there'll be things that pop up unexpected, but you can have a pretty good feel for, okay, this is what the property return is going to look like. And you have some control over, yes, this is, my money's working well if I put it into this investment, versus I'm just going to buy it. I'm going to break even every month, and I'm going to hope that the market takes my property value upward. And it's done that in, you look in the Californias and New Yorks, and the property values have exploded up. But, like anything, real estate is a cyclical market. And at some point there will be a pullback on that. So, being a numbers guy, finance guy, I'm always going to come and bring the numbers back into it. But that's the first on how I evaluate a property, is really going into the weeds with the numbers and, putting together some ratios or some calculations that will allow me to compare two properties or multiple properties and make a decision on whether any of them or all of them, or which one is the best option out of them.
Yeah, and I don't want to just beat a dead horse here with the rental properties, because I know there's other types, and I want to get into that with you as well. But one more question, and this covers any, I guess, investment property. Is there a magic number, do you think, Mark, when it comes to how many you should have? And the reason I ask that is, the reason I say that we wanted originally to buy 7 to 10 homes and have 7 to 10 rental properties was because you have 7 properties, 2 of them are vacant as you're trying to find tenants. The other 5, bringing on your rent and all the other things that you consider, should be able to pay the mortgages of the other 2, right? I mean, it's kind of that, just in case there's some vacancy there. And like I said, not just considering rental property, but any investment properties. What do you think is the magic number as far as how many properties should somebody have that would work well to cover each other in case of, you have to do a lot of repairs on one of them, and you have to, you can't get tenants for 6 months for whatever reason. You've got to do some things, whatever that is. Have you thought about that, or run any numbers like that?
Sure. So, and I approach it a little bit differently with everyone that I work with that wants to invest in real estate. They'll often come and we usually approach it from, they'll start off with saying, I want, they'll hear about financial freedom, or they want to have this much in passive income, or they want to replace their salary or their W-2 income with rental property income. And from there, we kind of back into how many properties they would need to purchase to do that. And what I mean by that is, we'll look at we'll say, okay, here's an example property, and this property let's just say it cost $50,000 to put a down payment to get the property, and that $50,000 that you spend on that property can generate, let's just say $5,000 a year in net income towards you. And we'll look and we'll see if they're trying to replace $100,000 of income, we know they have to purchase 20 properties. And we have to figure out, okay, how do we purchase the right 20 properties, so that, like you said, we will always calculate vacancy in there. We'll always take into account there's going to be maintenance on the property. And then the third thing we take into account is something called CapEx, which is capital expenditures. So maintenance may be your thing, like the toilet breaks and you have to replace the toilet. Capital expenditures are for the less common, less frequent, but the roof needs to be replaced, or we got to replace the boiler or something major. But even though it's not going to come up every year, you should be putting money aside every year to account for that. So we bake all of that into the analysis, and then from there we can say, taking all that into account, we think this property will generate this much income. And, that gets us 1/20th of the way towards that goal of hitting that financial freedom or that passive income goal that they have. And then once usually the first thing, kind of unlike the experience you had, usually once someone purchases the first one, then getting the next one and the one after that become easier and easier. And the reason they get a feel for it, they get a taste for it, hopefully it's a good experience. But then, if going back to that example we used, they purchased one for $50,000. Now we have to say, okay, this worked. This was great. We have that great cash on cash return. How do we then duplicate it? So now we have to figure out, where's the next $50,000 gonna, how do we save for that? And you can always, you always want to kind of recycle the money. So if it's generating 5,000 of net income a year, we put that 5,000 in. Next year, we only have to figure out, okay, where do we come up with 45,000?
Mm-hmm.
And there are different places where you can come up with money from different loans to raising money from investors. So there's different ways to do it, but the goal is to get enough so that the properties actually start acquiring the income that's generated from the properties start acquiring new properties themselves. So you can kind of almost put it on autopilot. And it starts that snowball effect where you purchase 1, 2, 3, and then all of a sudden those 3 generate enough income where you can purchase your 4th one, and then the 4th one. Now you have 4, and pretty soon you have the purchases a 5th, and then 7, and then 10, and that's how you really accumulate or scale up the amount of properties that you have.
Yeah, absolutely. No, it's very wise. Like I said, in my case, it was just a situation where we had the perfect renters, nice guys. Water heater went out. They called me up, went over there to take a look and see what was going on, and went down to the basement, and there was an entire grow operation down there. So I had to report that to some local authorities, and so that was a 6 months of kind of pain and suffering, but learned some valuable lessons on if you have renters that are perfect and they pay cash every month on time. Maybe there's something going on. Yeah. So what types of real estate options are there besides, we talked a lot about rental, but what else is there? Yeah.
So now, we talked the rentals, you're active, you're dealing with things. There's also a passive approach to this where you become an investor, and you can look at it as, I'm going to take a the same. You can look at it as very similar to investing in a stock, where you hand over money, you purchase a stock, and someone's running this show, and essentially it's a business that someone's running. You can do the same thing with real estate. You don't have to be hands on with it, and there's different ways to do that. So it's become very popular. There are sites that are called crowdfunding sites where someone will go to the crowdfunding sites, and the two popular ones that I like are called Fundrise and Real Crowd. And someone, you'll have these big professional real estate development companies that have been around for years, have a history. So it's not a, fly by night operation where someone from the middle of nowhere is trying to start a project and you have no idea, you know what this person has done. But they're looking to raise money to do some kind of project, and that project could be purchased an apartment building in Louisville, Kentucky. And you can look at all the details. You can look at all the analysis that's done. You can look at all the history of their past projects. Technically, you can go out and fly to Louisville if you want and actually look and see if it's a real property. But essentially, you're investing, and they're doing everything. So they're the ones who are, they've done the analysis. They're the ones who are negotiating. They found the property. They're managing it day by day, and eventually there'll be some exit strategy where, they may even rehab the property or in the most extreme case, it may be a full development where they're buying land and are going to build something from scratch on it. So, and what will happen is you would invest in it, and you'll get the monthly reports. And sometimes they'll that same net rental income, they'll kick back to you, whether it's monthly, quarterly, or semi-annually. But you'll have a good feel for what's going on, and you don't have to deal with all the headaches associated with rental property.
Interesting. Yeah, I haven't heard of that before. That'd be something to look into for sure.
Yeah, and then even being a financial advisor, the local real estate developers, local investors are always coming to me and saying, well, I have a project. Do you know of any investors that would be interested in it? And, I'll get every week a different project comes by. A lot of them are local here, but some are in Texas or some other parts of the country. But it's the same thing. We have to go through the project and see if it makes sense. Every project that's come across looks great on paper. Do they all turn out great? No. And that's the other thing that people think. It's, real estate, there's no risk. This, property values just go up. And, like everything, there's risk involved with it.
Yeah, absolutely.
So you make that decision whether you want to take the active approach or the passive approach or both. And I'm a proponent of both types, just as long as you know what you're getting into and that you do your due diligence with each project, whether you're purchasing it yourself or whether you're going to go in with another investor in it. And that due diligence is one of my favorite books on real estate investing, or kind of how I got started into the analysis part of it, is something called What Every Real Estate Investor Needs to Know About Cash Flow and 36 Other Key Financial Measures. So it's maybe one of the longer book titles that I come across, but it's a great dry read, so it's not the most exciting, but it really goes into the details of, look, you want to be a real estate investor. It's not I'm just going to buy this one because it looks good, it's in a good area. It really focuses on, these are the numbers you have to focus on and to determine whether that property makes sense or not.
Mm-hmm. How do you evaluate a real estate opportunity, Mark? I mean, is that something that you help your clients do, or is this just you help them find somebody that can help them do that?
Yeah, no. So I'll definitely do it. And kind of from my side, how I got started in it was I started working with a couple of people who didn't want to invest at all in those typical stocks, bonds, and funds, and just wanted to invest in real estate. So I said, okay, if I'm going to add some value to this engagement, or if I'm going to be able to help them, I better figure out how to analyze these properties and what they should be looking for. So that was when I first got started about 10 years ago. And it's kind of grown to that, where someone will come to me and say, Mark, I came across this property here, and I'll give them a list of what information I need to analyze the property. But once they get me that information, I can quickly turn around kind of an analysis on it, and from the numbers. And I know it's not just numbers that go into making that decision, but it's probably the biggest component of that decision or should be the numbers. We can look at it and we can also compare multiple, properties. So there are a couple different ratios that you want to look at. You want to see, okay, if I'm going to invest, $50,000 into this project, what am I going to get as a return each year? And that's called the cash on cash return. Or if you want to look at, well, what does it cost to acquire that income stream that I'm going to get? And that's called a cap rate. And then there's the third ratio, which is another rate of return to compare properties, is called the internal rate of return, which it's a little bit more complicated, where it actually takes into account present value of cash flow. But it's another rate that we calculate. And the whole purpose of it is just to look and see whether something makes sense to pursue or not. And that's really how I approach it on my side.
Yeah, fantastic. I mean, it's not always obvious. Like, somebody's on a street corner and says, "Hey, I've got a Blockbuster video that I'll sell you." I just don't think that's going to be the wave of the future,
right?
With cassettes and things. So it's great that you offer that service, because again, I went into it eyes wide shut, kind of thing, and I could have used some good advice at that point. When do you mentioned the clients that really kind of got you into this, right? They didn't want to invest in anything else. They really just wanted to look at real estate. But for those that have other investments and the traditional investments, I guess is what I would call them, and want to do this, how do you incorporate all that together?
Yeah. So, like you said, we want to make sure that this is part of their strategy. And real estate is one alternative investment type. There's different other ones. Probably the second most popular one that people like to invest in is that gold or some type of alternative currency, and Bitcoin's becoming a popular one that comes across a lot as well. But first you have to know what you're getting into. So like I said, there is risk involved in real estate, and just ask anyone who held real estate properties in this area in the 2008, 2009, and was but one of the biggest differences between stocks and real estate is the use of leverage, where it's great when, using leverage in real estate is great when times are great, but it could be, it could be a problem when things go down. The other thing too is, like I mentioned, there's different levels of transparency into the stocks and real estate. So and what I mean by that is, with a stock, I can get the stock of Apple price instantaneously every single second. And we also get hammered by the media that says, oh, the Dow is down this or the Dow is down that. So everyone has that perception that, stocks, they're not, it's too risky. I don't know what I'm, what I'm investing in. Real estate is there's no risk and prices just go up. But reality is real estate market is just as volatile as the stock market is. We just don't see it every day because, and I know like websites like Zillow, you're able to at any time to look and see what, theoretically a property is valued at, but the markets are different between the two. But so you really have to take that into account too, the risk of investing in real estate property. But it's all going to come back to what someone is trying to do. Are they trying to, replace their income and have some, passively and be able to stop working at in the next 5 years? Or do they want, some people will, with the Airbnb becoming more popular, people are buying these combination vacation homes / rental properties where it's a place for them to go on vacation. And when they're not there, they Airbnb it and obtain some income from it. So I approach it by really looking at all the options, really looking at what cash what funds do they have available to invest, and what the different options take in terms of time, what liquidity. So if they need money, locking it up in a real estate project, for the next however long, it's a different type of investment than stocks in terms of liquidity. You take that into account. You take the tax benefits. So we look and we say, okay, if we put our investment in something that's going to generate this return, what's the tax consequences of doing that? And from there, we build out, kind of that asset allocation strategy of, okay, we're going to allocate this much, into this type of investment, or, 20% into real estate, this real estate bucket, and, 15% into this type of investment. And from there, that's how we generate that plan off it. And, we update it, we monitor it, and we change it as we need to.
Yeah, no, that's fantastic. All right, Mark, we've covered a ton. It's funny that you mentioned Airbnb. I am actually looking at a plan for next year. A home that I live in, the home I live in, not my rental property, but the home I live in, I'm looking at doing Airbnb because in the Omaha area, we have the College World Series. And so I'm thinking, if I can go on vacation for 2 weeks when the College World Series is on and Airbnb my home for those 2 weeks, they'll pay for my vacation.
Yeah, exactly.
So I think those are pretty interesting options. I mean, there's so many different ways that you can use different properties and so on and so forth. So this was a great podcast. Mark, is there anything else that you need to convey to the audience today about this subject specifically?
No, the only thing I would really reiterate is, if you're going to get into real estate investing, have a plan or have a strategy on how you're going to do it. And that way, the chance of being successful with it will be that much more if you strategize and really do your research and homework on it.
Yeah, absolutely. And I wish I had you back in 2001, back in 01, I'm back in my day in 01. If people are interested in what we've been talking about today and they're interested in kind of exploring that, how do they get a hold of you? Yeah,
I'd love to talk. You can go to my website, bautisfinancial.com, and on there you can book a free consultation and we can talk about real estate.
Fantastic. Thanks, Mark.
Thanks, Eric.
All right. And thank you all for listening to the Agent of Wealth podcast with Marc Bautis. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Mark comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. And this podcast specifically, if you've got friends or you've got family members that have been, maybe you've been talking around a campfire or with a glass of wine thinking, I should get into some real estate. Share this with them because I know of a lot of people who go into real estate together as a financial option. So share this with them so they can get some insights, and then both of you call Mark because he's got the answers. Again, thanks for listening today. For everyone at Bautis Financial, this is Eric Johnson reminding you to live your best day every day, and we'll see you next time.
Thank you for listening to the Agent of Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Bautis Financial. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment and financial planning.